Hello there everyone. In today's video we're going to take a look at the Liberal Democrats' tax announcements in their manifesto for the upcoming UK general election. So let's get straight into it. First of all, capital gains tax, which interestingly was number one on their list, as it turns out, for tax pronouncements. Changes to capital gains tax, if they got in, they would have three rates: 20% rate on gains up to 50,000. A 40% capital gains tax rate on gains between 50,000 and 100,000, and a 45% rate of capital gains tax on gains in excess of 100,000. Interestingly, these rates would not be dependent on the level of income tax that a taxpayer pays, like they are now. Basically, you add on whatever your capital gain is to your income tax to determine the rate at which you pay CGT. Right now, Lib Dems has said, look, we would do it completely independently of income tax. So standalone rates of CGT. They would also up the personal allowance for CGT, which has now come all the way down to 3,000. Remember, it used to be 12,000 for many, many years. Lib Dems said they'll get it back up slightly to £5,000 a year. And they would also introduce an inflation allowance, saying that any gains on assets that are purely a result of inflation will not be subject to capital gains tax. Well, that's a good thing. Harks back to the old indexation allowance from yesteryear. Like I said so many times, everything tends to come full circle in the tax world if you've been in it as long as I have. So inflation allowance, rather like the old inflation allowance that they had many years ago. So, what else have they said? There'll also be targeted relief for small businesses with regards to capital gains tax. Okay, we'll wait and see what that's all about. So that's CGT. Next on their tax list, an end to retrospective tax charges. So in the last 10 years or so, particularly around some certain types of tax avoidance, there have been retrospective tax charges. Where the government have said we're going to go back and slap you for tax years ago on transactions that happened, even though the tax charges weren't in place. Then we'll do it retrospectively. The Lib Dems have said, no, we don't like that. We'll get rid of that. They'll also, if they got into power, review the IR35 legislation. Now, remember, a bit of a compare and contrast. We looked at the Reform Party. They say they would abolish IR35. Lib Dems have said they will certainly review it. They've said they will reduce the income tax burden on people, not by cutting the headline rates of income tax, but by increasing the personal allowance. So, Labour and Tories committed to this fiscal drag arrangement where the personal allowances don't increase for the next 4 years. The Lib Dems have said, look, we will increase the personal allowance, similarly to what Reform have announced. So that's the personal allowance. The Lib Dems also said they will restore the bank surcharge and bank levy, basically going after the large investment banks in the city, retail banks as well. This was a policy that the Tories reversed. They did hit them for some surcharges and levies several years ago. Then they put an end to that. Lib Dems have said, yeah, we'll bring that back. Thank you very much. As with the Labour Party, the Lib Dems will introduce a windfall tax to the oil and gas companies on the so-called super profits, however you define what a super profit is. Digital services tax. So this is the first of the party pronouncements that I've seen affecting this area of the tax world. And this is basically a taxing tech giants. So what tends to happen is a lot of the times governments will think, right, who's got the deepest pockets? Let's hit them for a bit more tax. Exactly like oil and gas. So they say, oh, tech firms making billions and billions, let's just hit them for some arbitrary tax, transaction tax. And currently that is in place in the UK. Digital services tax, which is 2% on, I think it's on top line, isn't it? Quite, like I said, it's quite a niche thing, only applies to a few firms. But anyway, the Lib Dems have said that they will triple that rate from 2% to 6% on the so-called digital services tax affecting the tech giants. Next one, interesting one again, I haven't seen this, anything comparable in any of the other parties' announcements, share buybacks. If you buy back shares, if you do any sort of share transaction, you pay stamp duty, 0.5% of the value of the shares. That's been in existence for years and years. What the Lib Dems have said, look, they said, we want to discourage FTSE 100 companies from doing so-called share buybacks. Now, if you're a shareholder of a FTSE 100, one of the ways that you can realize value in that investment is A, by getting dividends, or B, by the company buying back your shares at a higher price than you pay for them. So this is company share buybacks, and I've done videos on this before, have become increasingly popular, particularly in the USA in the last 10, 15 years, as opposed to dividend payments to shareholders, share buybacks. And they're becoming more popular over in the UK. So for some reason, the Lib Dems have got a bee in their bonnet about them, saying that they stifle productivity and it's not good for investment, that FTSE 100 companies should be doing these share buybacks and various things. They just don't like it. So they're going to slap on, if they got into power, a 4% stamp duty tax on share buybacks. So not 0.5% as it is now. That's an 8-fold increase from 0.5% to 4% on all company share buybacks from FTSE 100 companies. Very interesting. There you go. Never seen anything comparable from any of the other parties. And finally, what have I got down here? Oh yeah, a levy on gambling companies. Lib Dems saying, look, there's a bit of a problem with gambling in the UK for many people, distressing various issues. So let's slap on a levy to the gambling companies. So there you go. Overview there of the tax announcements in the Lib Dem Manifesto. If you like this video, please do subscribe. And as always, I'll see you soon.